Hello, my name is Enrique. I am a real estate and mortgage broker. This video is for the President and the Congress, in particular the finance committees. So if you know any of them, please forward it to them immediately. Now I want to say you hit the target with FHA Secure and Hope for Homeowners program, but you missed the bullseye. Now this video will recalibrate your aim so that you have the perfect solution to the housing crisis as it covers every base. Now, the solution is simple. Explaining it, however, has been very difficult. Now, genius is seldom understood because there's a real fine line between genius and insane. Now, I promise you, I am neither. The genius is in the simplicity of the solution. And it's simple because two of the three instruments that we will be using already exist, and both are FHA products. Now, I'm going to give you my simple three-step solution, then explain it. Next, I will give you a comprehensive list of benefits to the American homeowner, lenders, financial markets, and the economy. Time permitting, I will review the President's plan and comment on it. I wish he'd reciprocate. Now, I'm going to say one last thing before I begin. This solution requires absolutely zero bailout dollars, costing the American taxpayer not one dime. Let me be clear. Zero bailout dollars to the banks and to the homeowners. Here, in fact, is a simple solution to the housing crisis. The President and the Congress must, 1, mandate lenders accept the net proceeds of the FHA Hope for Homeowners program, which is approximately 92 to 93% of the present appraised value of that property. Number 2, mandate homeowners execute a silent second in favor of the present lender, valued at 50% of the equity due whenever the homeowner sells their property. Number 3, streamline the FHA Hope for Homeowners program based on owner occupancy and timely initial fixed interest rate payments. Now, if you understood what I just said, great. Please find your representative, both of your senators and the President, in the websites below. Click up here where it says more info, type or paste the three-step solution on a letter, an email, and a fax. Send them to all three of your congressmen and the President. Finally, call them and tell them to pass this into law. For those of you who require an explanation, please allow me. Let me begin with mortgage insurance. There are two types of mortgage insurance. The first, PMI, private mortgage insurance. These are private companies. The second, FHA, Federal Housing Administration, is the federal government. Now, FHA is a part of HUD, which is the United States Department of Housing and Urban Development. Much like the FDIC, which insures deposits in the bank, the FHA insures mortgages. Both were born during the Great Depression in 1933 to help us get out of the Depression. Traditionally, lenders require a minimum down payment of 20%. Mortgage insurance will allow you to buy a home with less than 20% down. So if you've only got a down payment of 10, 5, or even 3%, mortgage insurance will insure the lender for the balance of the 20% you did not put as a down payment. Bottom line, anytime you borrow more than 80% of the value of your home, you will have mortgage insurance. Okay, so now the first instrument we're going to use is the FHA Hope for Homeowners program. This program allows homeowners to refinance up to 97% of the appraised value of the property, even if they've been late on the mortgage and even if they are in foreclosure, which is great. It passed last summer, and there was a lot of excitement in my industry as Congress estimated that over 400,000 families would be helped to avoid foreclosure. It went into effect October 1, but unfortunately, it has been ineffective. Personally, I think it's an excellent shot, which is why I say it hit the target, but it missed the bullseye. On December 17th, NBC News reported that not one family had been helped as of that date. The address to that report is on the screen below, and you can check it out later. In that report, NBC stated the two reasons why it failed are excessive fees and lack of lenders' willingness to write down their mortgages. Now there is where they missed the bullseye. The program requires the lenders to voluntarily participate. I believe the reasons for the failure are: 1. Lenders are a complete and unorganized mess. You see, the company you pay your mortgage to isn't necessarily the company you owe your mortgage to. They are just servicing your mortgage and have no authority or capacity to approve a short sale, payoff, or modification. Number 2, subprime mortgages were purposely designed to avoid mortgage insurance, yet lenders have held out for a bailout. That is not a viable or responsible financial incentive. Number 3, the proper incentive for lenders to participate has not been unveiled and presented to them as of yet. In other words, who said it has to be all or nothing, and why? As I just mentioned, the company that receives your mortgage payment isn't necessarily the lender, but rather a servicing agent. These mortgages were packaged and bundled in batches and sold to various groups of investors. Then there are groups within those groups. As you can see, it's very difficult to get all these minds to meet and agree on a term or definitive payoff figure. I just saw on TV a woman in Florida who has 4 to 5 ready, willing, and able buyers, all waiting 12 months for the lender's approval of short sale. She had to go to court. That's a complete mess. Now you see why we can't just leave it to the lenders to figure it out. That is insane. Lenders don't need our tax money. They need help in getting their own money. Money from their investments, namely mortgages, as well as money from their former shareholders, which I'll get to later. Now, back to step number 1. By mandating lenders accept the net proceeds of the new loan, we actually help the lenders receive their own cash liquid now, without having to go through the costly and time-consuming foreclosure process or bailout. Step number 2, the silent second with zero interest and no payments allows lenders to retain equitable vesting, which provides the proper financial incentive to unlock their underlying cash, which is tied up in these toxic mortgages. This is a way for both homeowner and lender to share equally both the burden and the benefit, the risk and the reward. Presently, at this moment, both homeowner and lender are out cash. The homeowner is out monthly payments, any improvements, and down payment they've made, while the lender is out the negative equity and any missed payments they did not receive, with great potential for much more loss should they foreclose. Again, it doesn't have to be all or nothing. This is split right down the middle, and to repeat, at no cost to the American taxpayer or federal government. Step number 3. STREAMLINE is an FHA program that's been around for over a quarter century. Basically, if you presently have an FHA insured mortgage, occupy the property as your residence, and made the previous 12 payments on time, you automatically qualify for a new FHA insured mortgage. There is no verification of employment, income, deposit, and a credit report is not run. So what we do here is adopt these underwriting guidelines of the STREAMLINE product and adjust them to the Hope for Homeowners program as follows. Number 1, borrower must be owner-occupant, which eliminates investors and speculators. Number 2, homeowner made timely payments when the interest rate was fixed, the first 24 payments, which proves the homeowner can actually afford the payments. The proof is in the pudding. Okay, now let me give you an example. Let's say you own a home and it's worth about $240,000. The balance on your mortgage is $320,000. You've got 7.5% as an interest rate, and your payment is $2,237. You owe $80,000 more than your home is worth. That's called being upside down or underwater. Here is how simple this solution is. You appraise a property